Okay, guys, this is a trader recap from Friday, the 26th of July. This is a buy that I took that wasn't successful. Eh, Everything kind of, the bias was correct, got wicked out, and then price decided to run to my target. So, you can't really complain too much. It is what it is. So, yeah, let's break it down. So, actually, this one starts on the weekly. Look at the weekly, we have this order block here, which we were reacting to, or I was expecting us to react to, because it is on this candle. Coming to the order block. And once we come in, I'm looking for some form of reaction, right? I don't think we come lower. I don't think we look to take this out in this particular week, last week. So I'm expecting a reaction. So let's see if we can trade the reaction. As you can see here on the daily, price does come in, taps into, oh wait, no, sorry, this one. Price comes in on the Thursday, um, gives us a nice reaction, and then I'm expecting a bullish push, probably up to this daily FEG, and then maybe for us to roll back over again. But for all intents and purposes, I was looking for us to be bullish. This is the reaction off the weekly FEG. Cool. So cutting down to a 1 hour, in this particular instance, what do I see, right? So I'm looking at a couple things here. One was, okay, we took some form of liquidity over here. We swept liquidity. This puts in a new type 1. This type 1 should give us a new low, which it fails to do. All right. So when I'm looking at that, I'm like, okay, cool. It's failing to give us a new type 1, which means that our new target should be at minimum these highs. I did not target those highs because I understood that Friday we may not want to get there, and I'm not very comfortable holding over the weekend. Um, but yeah, those are the thought processes that went through my head. So I was like, all right, cool. Where can I look to trade from? And we do have this H1 FEG in here. I can get it. There it is. Yeah, this H1 FEG in here, and that's where I was looking for the reaction for us to go higher from. Cool. We also do have it kind of stacked with this order block. That was secondary. I was really aiming for the FEG, but the order block does come in handy when looking at it. So let's cut down to the 5 minute here, and you can see my trade. This one, I will delete this. So on the 5 minute, what are we looking at actually? So I was viewing this from a perspective of the 3 minute, I think it was actually not the 5 minute. Yes, 3 minute. Yes, yes, yes. So I'm looking at this from the 3 minute perspective. And what do I see? I see that we have this push down. We have an aggressive push back up, reacting to the type 1 that was put in. Whoops, reacting to the type 1 that was put in at 9:30 open. So I'm like, okay, cool. We have the type 1, sweeps liquidity, pushes lower. Now we're getting a reaction to that. Fantastic. Price pushes lower again, but fails to close below. We just wick below. So when I'm looking at this, I'm like, okay, so we have relative equals here. We've swept those relative equals. Now we have a new push back up, which closes above the previous what we would consider an ISP point, or a potential ISP point. No, an ISP point, a new ISP point. Um, Even though it failed because it did not close below. So I'm like, all right, cool. So now I should be cemented. I should be ready to go for longs. So I put my order on looks like it moved a little bit, but on this FEG, and I covered the low that put in the FEG. Why did I cover this low? You can see that clear on a 1 minute. So let's cut down to 1 minute for a second. I do not trade on the 1 minute, but it was good for this particular example, right? So you can see that this was the FEG, the 3 minute FEG, and this was the point that put in the new high. So I thought, no, there's no way price is going to come back below here. So I covered it, gave it a couple of points, and yeah. As you can see, I was in and out this trade in 1, 2, 3, 4 minutes. I was in and out this trade in 4 minutes. Um, and price actually did come back below the previous low over here. It did wick it. So in any case, even if I had my stop down here, I would have been out. Unfortunate, but such is life in trading sometimes. But this is a trade I would take 100% of the time. No issues with it. This is a valid loss, right? Just how the dice rolls. Um, so yeah, we do put in the new low of the day. We expand up. Whoops, we come back up to in the 3 minute. I think you see this a little bit better. Are we? Nope. All right, we come back into the 3 minute FEG. We cover this low now, and we can proceed to our target, right? Target is 2 standard deviations of the manipulation range. Actually, let me just see here where exactly this would be. So this is the manipulation range, like so, like so. Yeah, so we would have tapped the two standard deviations, so this would have been a win and an ultimately break even if we would have come back to it. All right, so yeah. And that is the trade idea, guys. That's how I broke it down. That's how I was looking to trade, and that's the valid loss. I think I lost 250 bucks on 230. That's not on 230 something dollars on it, but good trade nonetheless. Dun, 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 dun.